Everybody wishes they had the foresight or the nerve to buy Amazon when the entire way up people said it was overvalued, right? The entire way, not making any money, blah, blah, blah. I remember Google's IPO. That was supposedly too high. Everybody wants to get into something like Facebook, too. Remember, Facebook sold off right after the initial IPO, and people did. But just because all those things happened and it turned into FAANG, would you put that kind of faith into DoorDash and Airbnb and some of these others, Gene?
I wouldn't, Joe. And I think that when we think about the future of tech leadership, we really have to segment into two pieces. First is platforms, and second is disruptors. So the simple answer is this recent IPO class, they are in the disruptors class, but they've gotten credit for a lot. And I understand the lessons that we've learned about always owning Amazon at a high price. But I think that the tech disruption, the performance, where we're going to see the best performing stocks, is going to come with this kind of underclass of tech disruption. Before we get into the disruptors, if I can just quickly talk about the platforms, we think FAANG will be fractured. What's worked in the past won't work in the future. And you need to be more selective on which FAANGs you own. And the ones I would really focus on is Apple. I think that there's meaningful upside here. I see this at $200 in the next year. This is really about moving through to hardware as a subscription, a hardware subscription bundle, very powerful. Amazon's another one. E-commerce is early. It's still nascent. Still, we're about halfway there. And Google, surprisingly, doesn't get credit for these pre-IPO companies they have nestled away in other bets. Calico about extending life. We have Waymo, obviously, the future of transportation. We have their X projects, which include wearable lenses for augmented reality, flying drone deliveries, learning robots. There's some really exciting stuff there. And if I can just frame in, I'm going to circle all the way back to the substance of your question is, where is the disruptor piece going to come from? That's that second piece of leadership. And this underclass, I think, underappreciated maybe tech leadership comes from companies like Zillow. I own Zillow personally, but I think this company is going to be massive. It's currently about a $29 billion market cap. To put it into perspective, this is 1/3 of the market cap of Airbnb. And they're going to take what they do so well about capturing the users on a monthly basis, checking out real estate, renting, buying, and add other products to that. And other companies similar, Carvana, even Take-Two. And so those three I would highlight is where I think this disruption is going to come from.
Yeah, I don't know how much is in these recent IPOs because the private market value reflected a lot of the FAANG and even this pandemic almost, I don't know what you'd call it, but it's almost a fever for reopening or for stay at home and reopening, but mainly, a lot of the digital, the idea that we've packed 5 years into 1 year, it was in the private market valuation. So then they come public and double. I mean, is there any way that you grow into that in the next year or two? DoorDash or Airbnb?
Yeah, I want to be cautious. One lesson that I learned in my days as an analyst, I recall downgrading a stock once based on valuation. And I remember the investor scolded me as an analyst and said that I'm the one who will decide how much these are worth. So I always want to defer to, the investing public more broadly is going to decide about this. But as you look at the history, and that's the substance of your question is, what's priced in here, and ultimately where is outperformance going to come from? This recent IPO class is phenomenal. They are disruptors. A lot is priced in. I think we're going to look at, the real substance is going to come from this other class that I talked about.
Shepard Smith here. Thanks for watching CNBC on YouTube.